In 1982, the federal government filed a claim for $50,600,000 against a bankrupt truck company money owed to its own workers' pensions. The workers' union filed a second claim right behind it, for $4 million more, the part the federal guarantee didn't even cover. So what happens when a federal court finally rules on who gets paid? Here's the answer nobody expects. The court found the company's net worth was zero. 30% of zero is zero. There was nothing left to take. This isn't a story about one dying truck company. You've probably already seen 5 other videos this year telling that story. This is about what actually happens to your pension when the company holding it collapses, using the exact federal case that decided it. That company was White Motor Corporation. This is what was left when the trucks stopped and the paperwork started. Quick version, because you may already know it. White Motor started in 1876 as a sewing machine company in Cleveland, Ohio. The founder's own sons pushed it into steam cars, then trucks, and by World War I it was the #1 truck maker in the country. From there it went on a buying spree: Sterling in 1951, Autocar in 1953, Rio in 1957, Diamond T in 1958, all absorbed into one growing company. By the late 1960s, White didn't just make trucks under its own name. It owned 4 other truck makers outright. That part of the story has been told. What hasn't been told as often is what happened to the people who worked there once the whole thing came apart, and that's where this video actually starts. September 4th, 1980, White Motor Corporation files Chapter 11 bankruptcy. Case number 80-13361, U.S. Bankruptcy Court, Northern District of Ohio. At the time, the company runs 2 major plants, one in Cleveland, Ohio, the original home turf, and one in Exton, Pennsylvania. Here's what most coverage of this bankruptcy skips past. Once the filing hits, White Motor's pension plans get terminated. Not paused. Terminated, and when a private pension plan gets terminated like this, a specific federal entity steps in, the Pension Benefit Guaranty Corporation, or PBGC, a government insurance fund created under a 1974 law specifically to cover situations exactly like this one. PBGC gets appointed as the successor trustee for what's left of White Motor's pension funds. Worth being clear about what PBGC actually is, because it gets misunderstood constantly. It's not a taxpayer bailout. It's an insurance fund, paid into by premiums from other companies' pension plans across the country, the same idea as any insurance pool, just for retirement funds instead of cars or houses. So now the pension fund has a federal trustee. The next question is simple. How much does White Motor actually owe? And to who? May 28, 1982, PBGC files a formal claim against White Motor for approximately $50,600,000, the amount owed to White Motor's own employees under the pension guarantee letters the company had issued. Then, on November 7, 1982, the United Auto Workers, the union representing a huge share of these employees, files a second, separate claim. $4 million. Not overlapping with PBGC's number. This $4 million covers pension benefits owed to workers that the federal guarantee didn't cover at all. 2 claims, $50,600,000 from the federal insurer, $4 million more from the union. On top of that, both claims sitting against a company that's already inside bankruptcy court with roughly $1 billion in unsecured debt from everything else it owes. Now it's a federal court's job to decide exactly how this gets resolved, and the ruling that comes out of it is not what most people expect. The case: Pension Benefit Guaranty Corporation versus White Motor Corporation. Argued January 11, 1984, decided April 12, 1984, by the 6th Circuit Court of Appeals. Here's the legal mechanism at the center of it. In plain terms, under federal pension law, White Motor could have limited its own liability to only the money it had already put into the pension fund at the exact moment the plan was terminated. If it had done that, PBGC would become directly responsible for paying out the rest to workers under federal guarantee law. And PBGC, in turn, would be allowed to go back and recover what it spent from White Motor, but that recovery is capped by statute at 30% of White Motor's net worth. So the court had to answer one number. What was White Motor's net worth at that point? 0. The company's net worth by the time this case reached the appeals court was 0. 30% of 0 is 0. There was nothing left for PBGC to recover from White Motor, no matter what the statute allowed on paper. Now, to be clear about what that does and doesn't mean, this isn't a ruling that says the workers got nothing. PBGC's federal guarantee still covers what it's legally required to cover, regardless of what it can claw back from the company that caused the shortfall in the first place. What the ruling actually decided is who eats the loss when a bankrupt company has no assets left to pursue, and the answer built directly into the law is the federal insurance pool, not the company. Not directly the workers' guaranteed benefits. The insurance system itself absorbs it. That's the part almost no coverage of this bankruptcy gets into. Not a company went under. A specific dollar-figured fight over exactly who was on the hook for the people who built the trucks, decided in a federal courtroom, with a number that came out to nothing. Here's where the legal case connects back to something you can actually picture. August 1981. Sweden's AB Volvo steps in and buys White's truck-producing plants as part of a court-ordered settlement tied to all of this. But Volvo doesn't take everything. The Cleveland plant, the original home turf, the one on East 79th Street, gets excluded from the deal entirely. Not because Volvo didn't want the real estate or the equipment, because of its age, and specifically because of the large pension fund liability tied to that plant, the exact liability tangled up in the PBGC and UR claims you just heard the numbers on. Volvo wanted the trucks. It did not want what came attached to that one building. Picture what that actually meant on the ground. A company's original home plant, the place the whole operation grew out of, left behind specifically because of what was owed to the people who'd worked there. Not because the buildings weren't useful. Because of the bill. Here's the part worth carrying with you past this specific truck company. PBGC exists right now, today, for exactly this scenario at any company, in any industry, not just trucking. If a private pension plan can't pay what it promised, PBGC's guarantee is what stands behind it, funded by premiums from other companies' plans, not by taxpayers. White Motor Corporation is simply the specific, documented case where you can see the entire mechanism play out in a real federal ruling, with real dollar figures, down to a company's net worth landing on exactly zero. Most coverage of this bankruptcy stops at the company collapsed. The workers' pension fight kept going for years after that headline, all the way to a federal appeals court in 1984, and it ended with a math problem, not a company. Sound off in the comments if you or someone in your family worked for White Motor, Sterling, Autocar, Rio, or Diamond T. We want to hear what actually happened to your pension. That's real information this video can't get anywhere else. Hit subscribe. This is Truck Truth HQ. Next video, we're back to the trap files, the used HD diesel listings that quietly roll back the odometer reading buyers rely on most. That video is coming.